Welcome to the presentation of the results of the fiscal year 2024 of Palfinger AG. My name is Felix Strohbichler. I am the CFO of Palfinger. Palfinger is the number one in the world for crane and lifting solutions. Our revenues in 2024 amounted to 2.4 billion. We are present in all regions worldwide with 30 production sites, which is really a huge difference to competition. And we have a global comprehensive sales and service network, which is a critical USP for our customers. We employed around 12,350 employees at the end of 2024. And at the bottom of the slide, you can see the revenue distribution by region for the year 2024. Around 58% of our revenue was generated in EMEA, 27% are coming from North America, and this is clearly a number which will increase in the future because it's our target to increase the revenue share of North America to 1/3 of total revenue. The other regions account for about 5% each. Palfinger is very resilient because we are serving a lot of different customer segments. We are active in the forestry business, in transport logistics, we are in waste management, recycling, we supply for marine applications, and we also supply to the construction industry for infrastructure, building construction, and private housing, but it's a lot of different segments, which makes us extremely resilient in terms of fluctuations in one or the other customer segment. On this slide, you can see the product portfolio of Palfinger. It's very innovative and powerful and comprehensive. We offer, on the one hand, solutions for land applications installed on trucks and rail cars. On the other hand, we offer marine solutions like offshore cranes for oil rigs, marine cranes. We offer rescue boats, wind cranes, and winches. And what all those solutions on the land side and on the marine side have together are the digital solutions Palfinger is offering for our customers. Palfinger clearly has a focus on boosting our customer satisfaction and also our profitability by doubling the service and parts revenue to 700 million until the year 2030. So please keep in mind that this is a very big lever for the improvement of profitability of Palfinger. We also have defined a new strategy for APAC. We plan to achieve around 300 million of revenue until 2030 out of APAC, which accounts for around 10% of our revenue. We are present with a joint venture in China, and we are now going to invest in an assembly plant for the Indian market, but not only for the Indian market. We will also export from a new assembly plant in India to other APAC markets, to the Middle East and Africa. This is an investment of more than 25 million and will give us huge opportunities in the future to grow profitably. Sustainability is a very important factor for Palfinger. We are focusing on sustainability in our strategy a lot, and we see a lot of opportunities for our business coming from the trend to ESG. Here we just want to highlight two KPIs which underline that we are working a lot on improving. On the one hand, we have brought down our accident rate by 27% compared to 2023, and also our carbon emissions went down by 17.6% compared to the previous year. Here you can see the order book development since 2022. You can see here a 50% decrease since the year 2022 until the end of 2024. However, please take into consideration that the 1.5 billion was an extraordinary number, which is not sustainable. We still have an order reach of around 5 months, which is very healthy. And the good thing is that order intake has improved substantially in Q4 2024. So the order book has not decreased anymore. And now we start to build up order book slowly. In the next line, you see the share of our service business, which has gone up from 15% in 2023 to 17% in 2024. And as I mentioned before, our target is clearly to get to substantially over 20% of service business share within the next 2 years. Coming now to the P&L of the group, you see a slight decrease of revenue in 2024 compared to 2023, and also a slight decline in profitability. However, what is important to mention here is that although those numbers look quite stable, we saw a major decrease of profitability in the EMEA markets due to the economic environment, and this could be largely offset by the increased profitability in the marine business, and also from the restructuring of tail lifts, which was successful in the last 18 months. So this underlines that the broad setup in terms of portfolio and regions of Palfinger makes us very resilient, and we are able to cope with declines in one region with other segments and other regions. Coming to the consolidated net result, 100 million, which will lead to a dividend proposal of 90 cents, which is the second highest dividend in the history of Palfinger. Our dividend policy is to pay around 1/3 of our net income, which is also very attractive for our shareholders. If we look at our balance sheet KPIs, I just would like to highlight the equity ratio of more than 35%. So Palfinger is very solid, very stable. Our net financial debt at the end of 2024 amounted to around 660 million. However, we have several exceptional levers to further significantly reduce our net financial debt to a level of below 600 million until end of 2026. On top, we also have treasury shares, which amount to 7.5% of all issued shares. We could also monetize to further bring down net financial debt to a level of even below 500 million. Last but not least, our cash flow in 2024 was 120 million, so very, very positive free cash flow. Our target is clearly to achieve every year a free cash flow of at least 100 million. And for 2025, we still see a major potential in reducing inventories and improving working capital, which will help us to achieve this number in 2025. Last but not least, what is the outlook for the year 2025? 2024 first half year was an absolute record year with a huge backlog from the years 2022 and 2023. So in 2025, we now have a development that we started with a lower output because we had to decrease our capacity in the fourth quarter of 2024. However, due to the fact that the order intake in the core markets in Europe is improving and has been improving since Q4, we expect clearly a development of the earnings in a positive way from Q2 onwards, and in total, we expect a good full year 2025. Let me conclude with the financial targets for 2027. We target a significant increase in sales and earnings to a revenue from organic growth only of 2.7 billion until 2027, a 10% EBIT margin, and a ROCE above 12%. Thank you for your attention.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.